Hello everyone, it is Sterling here with the August 2016 month-end review for the Day Trading Forex Live Bank Trading Strategy. Sorry I'm getting this one out a little bit late. Personal circumstances have kind of put me a little bit backed up as far as these month-end reviews go, I should say. These month-end reviews are for the public, and so whenever I get backed up for any of the, or just in general with a lot of members signing up and having a lot more to do as far as that goes, sometimes I hold off on the free content and this goes without saying. Obviously, I have to take care of the member side first, and so that's what happened. Just got backed up with a lot of things. Had quite a few new members over the last couple months, and working on a few new things in the members area. So these kind of got put on the back burner for a while. If you are a member, you already know the results of these last 2 months, August, September, and currently sitting around, I believe, about the 8%, plus 8% for October. I think it's plus 8.5, but that will come out in another week or two once October finishes up, and I have a little bit of time to finish that video. So let's go ahead and go through August. September will come out not too long after this. Maybe I'll put it out this week sometime still, or maybe next week, depending on when I actually send this out to our free email list as well. So these next coming months are really a good reflection on trading in general and some of the difficult aspects of trading. When I started these videos back in May of 2015, we had run a profitable record for the last 16 months in a row. And generally, and even before that, the prior months, our last losing month was December of 2014, and we were down about 2 or 3% that month, I believe, if I remember correctly. And so we went on this 21 month consecutively profitable month. And then we went into August and September, and those were probably some of our most difficult months in really in a 2-year period of time. And we just had a very nice stretch. Statistically speaking, I will have a losing month where I'm down maybe 2 or 3% every 12 to 14 months. Tends to be about the average over the last 7 years. And so we were kind of well overdue for a losing month. This month was not a losing month. It was a break-even month. But it illustrates, I think, the other side of trading, which is the fact that you are not going to have perfect market conditions for your strategy at all times. And when your strategy does draw down, or when it's not, producing just really nice profit, what are you having to deal with? Are you having to deal with large drawdowns, or, which is what a good strategy should do, are you having very minimal drawdowns? Are you having, bad months that are break-even months? Quite frankly, if you're having negative months where it's a few percent down or break-even, that's what tends to allow traders to continue. Where traders struggles when they have these massive drawdowns, because then that gets into revenge trading, over leveraging. And so it's a good illustration of that. And it's also a good illustration that these month-end reviews, it adds a little bit of credibility going back, in my opinion, at least, because if I could adjust results, if I could make results look different than what they actually are, this month and next month wouldn't be a break-even month, and next month wouldn't be 2% down. If I could adjust it, I can assure you I wouldn't adjust it to a negative month. And the fact is, these results are, at break-even, and next month at negative 2%. When we do have the rare down month or the rare break-even month, that's because there is no way to adjust the track record, whether it's a positive month or whether it's a negative month. Now, I know members understand that, but especially for non-members, they think that I can just, randomly say this is a trade or that is a trade. But what you'll see in this video, and you've seen in the past videos, and so it's a lot of repetition, the levels are pre-selected for the most part, and the newly created levels represent a very small portion of our profit in general. So even if you were just going off pre-selected levels, you're going to end up with results that are fairly close. I'd say overall over the last 17 months, we're up somewhere right around the 328% mark. That's a compounded gain. And so, even if you weren't taking in newly created levels, you'd probably be in the high 200s, which is quite close to that over that period of time. When you combine those pre-selected levels with the mechanical entry, it puts you in a situation where, again, I can't make it look like something it isn't. It either is a valid trade or it's not, and that is where the credibility of these reviews come from. And that's something that's kind of hard to explain to a member that does, or non-member that doesn't understand the setup. But especially for those of you that are members, it should give you the confidence moving forward to trust the results, trust the track record of the strategy, because unlike my FX book results that can be manipulated through shady brokers, there's no way I can adjust this one way or the other. So anyways, here's a record of our past months. You can see that over the course of the last month since May of 2015, had a very nice track record running. And we are currently still sitting at 335 this month, being break-even month. And then I gave you a figure from the following month, so you'll see that in the next video. So anyways, let's go ahead and get into the first setup. Let's go through these setups here in the month of August, or for the month of August. The first trade was the second, and it was a pound short. This level, again, was pre-selected, so I'll show you that. For some reason, I forget to go back and cover that trade, and I just skip right to the next trade. This one, where the arrow is pointing, is a 2% loss. And so, again, we start out with a 2% loss to start the month. We continue with the next trade, which would be on the 4th, and that was also a loss to start out the month. And this trade was from 32.96. So if I take over the daily market preview here, you can see that 32.96 was the lower level. This is, again, for August 4th. One spot 32.96 was the only listed level that we actually had a valid setup from. And if you look at 32.96 here, I'm going to try and get this over on the right hand side. This was originally a lower level, but we have rules to make a level or trade the opposite side from a level, what we term as a backside of that level. And I'm not going to get into all the rules criteria for there, because that's not what these videos are for. But the fact is, we broke through the level. We invalidated the level by having 2 consecutive candles opening and closing beyond it. And then we come into the backside, create the stop run up, confirm down on that setup. And then later, the market pushed up ahead of some news before eventually pushing to the downside. Ultimately results in a loss as well. So that starts out the month sitting at 4% down. And then we start to claw our way back a little bit, get in positive territory. We start out with the next trade. This was, again, on the pound. It was on the 12th. So I'll bring the daily market preview over here for the 12th, and the level was one spot 29.47. One spot 29.47 was the lower level. Daily market preview August 12th, one spot 29.47. That was one of our lower points, the only point that actually had a setup. And then one spot 29.47, we come into it here. This break over here was not over 3 pips. That's why this original break could not have been a valid confirmation up. Again, mechanical rule set dictates whether it's a valid entry or not. We get over a 3-pip break here, and then later we confirm up. At the end of the confirmation, depending on exact entry, this one was right around the 15-pip mark. Some of you were 13, 14. Some of you were 16, 17. So I'm splitting the difference, calling it a 15-pip trade, which is a 1.5% gain. It's originally every 20 pips essentially on this setup would have been a 2% loss or gain. So 15 pips is a 1.5% gain. That takes us from down negative 4% in the month to down negative 2.5% on the month. Stop run confirmation. We exit ahead of this news right here, right around this point, ahead of the news, a little bit up because that's where it was a few minutes ahead of the news. And therefore, that is the result of the trade. Continuing forward, again, another pound trade. Pound getting a lot of action this month. Well, getting the action, I should say, not a ton. But anyways, next trade on the 15th. It was a pound short again, a pound short, I should say, from 29.41. So we skip over the weekend here. 29.41 is right here. And this was the next trading day. Again, skipping over the weekend. Here's the level, pre-selected, timestamp in YouTube's. You know, it was there to begin with. 29.41 was an upper point, the only upper point that we had any contact with. We come into 29.41. This hits a high of 29.44 and 8/10, so it was a 3.8 pip break, over 3 pips, which is fine. Next candle confirms down. At the time of the confirmation, you are already within the area where we will take the entry. And therefore, this entry is taken right immediately at the close of the confirming candle, open of the following candle, and this results in a full 4% take profit as it takes off to the downside and hits 40 pips right around this mark right in here at the start of the New York session. And so that takes us from down negative 2.5% in the month to up 1.5% on the month. The next trade was the next day on the euro. This was on the 16th, again for the euro, so we'll take over the daily market preview again here. 16th, one spot 1233. That right here was our upper point. Again, daily market preview, August 16th. One spot 1233 was the upper point. Drag this over, and this was just about out from being it was literally a tenth away from being a valid trade or not. So unfortunately, I validated on this trade. Again, I know a few of you guys didn't. If you didn't, well, then you dodge this loss here. Bottom line, breaks by over 3 pips. This next candle, remember, if 2 consecutive candles open and close beyond the manipulation point, then the trade is thrown out. This actually gets back down below 1233 by a tenth of a pip. It actually closes at 1232 and 9/10. So it only confirms by a tenth of a pip, but that's part of the mechanical process. That's what gives us the consistency, takes out the emotion. If you're a new trader, you struggle with emotion, you struggle with overtrading, things like that. If you can discipline yourself, you can be disciplined enough to stick to a mechanical rule set, it takes that discretion out when it comes to the entry aspect. This validates a confirmation, results in a loss, takes us from up 1.5% on the month, and it takes us down to negative 0.5%. So sitting negative 0.5%, sitting around that break-even area. And we've kind of gone back and forth this month. Next 2 trades were on the 18th. We'll start off with the euro. That was on the 18th. And this euro trade was from 1322. Again, that was our one and only upper point this day. That's August 18th, one spot 1322. And so 1322, if we drop a line there, 1322, we come into that, we get a break here by over 3 pips. Next candle doesn't confirm, doesn't reset the count. Following candle resets the count, becomes a new number 1 candle based on that's again a mechanical process, which is a little too long to discuss here. The following candle confirms down. This goes above the high by about 1.5 or so pips, not enough to stop the trade out at that time. It continues on, and then prior to the New York session, it would have stopped the trade out, and that would have taken us down to negative 2.5%. Again, negative 2.5% because that was a full 2% loss. And then the next trade that we had, or the other trade that we had on this day, was a short on the pound on the 18th. This resulted in essentially what was a break-even trade from 31.64. Now we were looking for a second push to the upside. This was a newly created level, so you won't see it here. This is the first newly created level of the month. We were only looking for a second push to the upside. That means we were only looking for long setups. So you might ask, why is this a short? Well, once the market has hit the ADR for the day, we can then look for the reversal of that move. We had a valid point back here at 31.64, and for the results of this month, this doesn't really matter, as the setup ended up essentially being a break-even trade. So after that level forms, we come back into that point. We get over a 3 pip break, and the next candle confirms down. Now what we did have as far as the trade management goes was we had a stop run long on the euro later in the day. So this would not be a stop run that we would take long, but as for trade management purposes, if we get an opposing stop run, although in this case not taking that one long, if this was during valid hours, we would have got out of the pound, went into the euro. But being that we get a stop run long off valid level on the euro, that's the point where we are moving that pound to break even. Now, this is the 20 candle, the 1 p.m. Eastern candle. And so at that point, which this right here would be the 20 candle, we're sitting maybe 12, 13 pips up at that time. And so that's where we're moving to break even, as again, you're getting a stop run against the trade that you're in, an opposing stop run, and you want to be moving that trade to break even based on our trade management rules. So that one comes back later, would have obviously tagged that out at break even, and overall sitting at the negative 2.5% mark still. And then we go over to the 22nd. This would be a euro trade, and this was a euro long on the 22nd. So we'll drag over the daily market preview here, euro long on the 22nd, and this was from 1305. That was a upper level, one spot 1305, so this would be a backside trade. And 1305, again, August 22nd, that is right here at the start of the day, so we get 2 candles that open and close above 1305, therefore invalidating any possible short. We come into the backside of that 1305 level. We break by over 3 pips, breaks by about 4.2 or so. The following candle confirms up, and at that point, you are sitting roughly about 9 pips from the low. In this case, with 9 pips from the low, we would use a 14 pip stop, 28 pip take profit. This thing, well, this first and foremost, this thing runs up about 20 pips. This thing was somewhere in between the 10 to 15 pip area. I rounded down on a previous trade. I'm going to round this up 2 pips. We'll call it a 15 pip trade, and that is sitting at the, or that is a 1.5% trade, then bringing us to a total of negative 1% on the month so far. And that kind of, that obviously goes back and forth. Next trade puts us in the positive territory for the month again, and that is on the pound. It's on the 30th. It's a pound short. So we'll drag over the preview here on that day. Pound short from one spot 31.15. So there's the level, upper level, one spot 31.15. Again, August 30th. So here's 31.15, and this one here, initially this breaks over here, but it doesn't break by over 3 pips. So we don't get the 3 pip break until all the way over here, breaks by over 3 pips, confirms down. At that point of the confirmation, we are sitting roughly 10 pips from the high. This being on the pound, we'd be using a 20 pip stop. With a 20 pip stop, 40 pip take profit from that point to the close of the day. This one is somewhere, again, a lot of times, depending on your exact exit, this could have ranged about a 5-6 pip range, taking the middle of that range and be sitting right on a 30, right around a 30 pip, give or take a few pips on the pound, 3% trade. That takes us from negative 1% in the month to up 2% there on the month total. And we go in the final trade of the month, which puts us back at break even. As again, I said at the beginning of the month, ended up being a break even month, and that was on the euro. It was the following day on the euro. And this would be the 31st. It was a euro trade, and this again will drag over the preview for the 31st. And so the level was 1132. Now 1132 was a lower level, so there it is, one spot 1132, August 31st, 2016. So there's one spot 1132, and what we had is we actually had a backside short on this one. So it came in, and we broke. We opened and closed beyond the lower point with 2 consecutive candles. That throws any possible long out from that level. Then we have a backside short as a possibility. Comes into the backside, creates a stop run, confirms down, gets stopped out relatively quickly. Would have been a 2% loss, and that takes us from plus 2% in the month to our month-end total that we started out, or that I mentioned at the onset of this video, and that takes us to break even for the month. So actually, the first break-even month we've had since doing these month-end reviews, I think in 15 or 16 months. Actually, this is the 16th month, I believe. So, well, 15th or 16th. So, bottom line, a year and 2-3 months, something like that. So, anyways, that leaves us with a total of 335% on the months, the month-end reviews, and we stay at that number. And this was probably, one of our tougher months, just being back and forth. And, what you'll notice about this is that we never really had a large drawdown. If you started out at the beginning of the month and you took every single trade, we were never down more than 4%. And so what that means is that's 2 consecutive losses. We risk 2% per trade. That's what all these results are based on, I should say. Some risk less, some risk, significantly more. But the point is, there was never more than a 4% drawdown. That's a really powerful point, because I think sometimes people always look at upside of a strategy, which is definitely something to look at for sure, but they fail to look at downside of a strategy as well. If a strategy is producing 50% per month, what I can assure you is that strategy also has significant drawdowns that are significantly larger than what we would ever have. That's an important piece to take away, because that's where traders break. This is a long-term business. This is not a business where you're going to retire in a year, just hammer huge lots and retire in 6 months, a year. A lot of people think that when they come into the market, but it's very similar to, I equate Forex to weight loss in a lot of ways. It's very similar. For example, the people that buy a program called P90X, it's probably one of the more popular programs in the U.S., probably very popular abroad as well. it is, I believe, the best-selling weight loss program that there is out there. And there was a study on that, and it showed roughly 10% of people that actually get that program. And this number, I'm sure, can fluctuate by region and type of individual. But overall, it was about a 10% mark of people actually completed that. And that makes a lot of sense because that number is very similar, whether you're talking about trading, people trying to lose weight, people trying to quit smoking. And at the end of the day, just like with that weight loss program, for the 90% of people that didn't lose any weight, is it the fault of the program that they didn't lose any weight? Well, of course not. You know, you have 10% of people that prove it works, and if you actually do it, it works. It's really no different than trading. Where people struggle is they fail to stick to a strategy. They fail to maintain the discipline to stick to that strategy. They overtrade. They get themselves in bad positions. They have to start over leveraging, or they feel like they have to start over leveraging. And so all those issues tend to come from very large drawdowns, or that's where they have a very strong probability of initiating from. There's other areas that initiate that as well, but they definitely come from large drawdowns, and that's what this strategy is really designed to do. It's designed to produce consistent profits that aren't going to be, we generally, especially if you're just trading two pairs, if you trade other pairs, you'll have a lot more opportunity. But if you're just trading two pairs, you're not going to have huge upside. That's not what the strategy is designed to do. It's designed to have very low drawdown, produce consistent results, and perform in any type of market, whether it's a super tight range, a wide range, a trending market, a range-bound market. And so it does not get hammered in any type of market. And it also performs consistent through those markets generally. While it will have times that are better and times that are worse, it doesn't tend to have a type of market where it absolutely gets hammered. And that is what this strategy is all about. It's about consistency. It's about giving you a strategy that you can use for the next 10 years of your life, where you are consistently building an account, compounding an account, and doing what professional traders do, which is look towards long-term goals, compounding gains, compounding their account, and ultimately getting to their end goal over an extended period of time. So this is a good month-end review, kind of illustrates, the fact that even a strategy that produces so many consecutive months in a row of profitability, you will have drawdowns from time to time. And this was our strategy is no exception to that. This month wasn't a drawdown, but was a break-even month. But anyways, that is it for this video. I won't take up any more of your time. I hope you enjoyed the video. Look back at previous month-end reviews, look at our track record, and if you want to learn the bank trading strategy, feel free to check out daytradingforexlive.com. Ton of free information on the site. I no longer do a daily commentary on the front end of the site, which you can see I stopped doing that back in May of 2016, I believe. The members area remains unchanged, but you will find a ton of good information over the course of years that has been posted, and you will get the next video, which will be September, probably sometime later this week or early next week. If you're not on the free email list, I'd recommend doing so because you'll get an email when that is sent out and when that is posted. All right, guys, that will do it. Until next time, happy trading.